Hi everyone and welcome to another episode of Cryptocurrency News. Today I'll cover topics from the 9th of April till 29th of April. As always, please like, comment and subscribe. Please look at the links in the description below. They will save you some money. Let's start with Paolo Arduino from Bitfinex. He's the CTO there, bragging about liquidity on his exchange. So he says that when high volatility happens, like on the 12th of March, Bitfinex order book shows its true power, that the liquidity of the order book is really good. And Bitfinex is a big exchange. Its liquidity is a little bit increased by the presence of margin positions on the spot exchange. But overall, the liquidity is really high there, and in my view, it's the best spot exchange out there. It has some issues with regulation and stuff, but these seem to be fading away. This is a very interesting post by Jamison Loop. He says he posts the link to crypto51.app, which demonstrates the cost of 51% attacking a coin. So to 51% attack Bitcoin, it costs $640,000 per hour, and that's quite expensive. But when we go to a coin like Dash, which has 0.8 million market cap, the cost of 1 hour attack goes down to $2.8 thousand. So you can get your hands on 100 million worth of Dash and then deposit this to the exchanges while at the same time 51% attacking the network. So by attacking, you are just mining another parallel chain of transactions where you didn't include your transactions where you have deposited $100 million worth of dollars in Dash to the exchanges, and then you sell Dash, withdraw money from the exchange, and after, let's say, 2-3 days, you or even after 1 day, you reveal your chain, which is longer than the original chain, and everyone just continues mining off the chain that you have posted, hopefully, and you have made $100 million. And the attack like that costs 2.8 times 24 hours. That would be more or less $70,000 per day, and you've made 100 million by double spending that $100 million worth of Dash. For coins like, let's say, Bitcoin Gold, it's less than $400, and Quark Chain is $4, Deep Onion is $2. So you can do that just for fun, and the cost of attacking these exchanges like Zeta Coin is pretty much zero. So it just hammers the point how important it is to use a big secure chain, which is expensive to attack, because this is how you achieve immutability on your chain. An interesting talk by Ray Dalio on the TED Talk. So here he's chatting to Corey Hajim, and I highly recommend you watch it. He has a very good view of macroeconomics. This is an interesting chart showing the amount of margin longs on ETH/USD on Bitfinex. It has gone from 1 million to 2 million ETH on margin positions, and the increase from 1 to 2 million has been over around 1 month, maybe up to 2 months. And the point I'm making here is so it looks like someone has borrowed a lot of dollars to buy 1 million ETH, but the truth is that that person who did it could be just using his own USD on margin side of Bitfinex, and he can just press one button, which is claim, and then this 1 million ETH long disappears, becomes a normal spot position. So it doesn't really make sense to buy 1 million worth of ETH, 1 million ETH, especially when the prices on derivative exchanges are really low, like ETH is trading at a discount. The futures are in backwardation, the funding favors longs, so why on earth would you buy so much? Why would you borrow dollars to buy all this when you can just go long where funding is favoring you? Maybe he just did that to look like he's easy to get leveraged while he is not. Maybe he wants people to sell short and not buy ETH. I don't know. Maybe he wants to buy more cheap ETH. This is a nice conversation. I wonder whether you can hear it. So it's a fun post where the host asks whether this social capital CEO would like the airlines to fail, and he says yeah. An important point here is that when an airline fails, it doesn't mean that it ceases to operate forever. It means that the shareholders might lose all their money, but then someone else can buy this airline and operate it as normal. Maybe it will just be life as normal afterwards. Maybe if it's just a short-term stress like coronavirus, which goes away after some time. Michael says, the only real question we face is not whether we should or should not repay this debt, but how are we going to go about not repaying it? A very important question, and a link to a good article about the modern debt jubilee. So this debt has to be written off. It will result in a big transfer of wealth, and Bitcoin just fits nicely within this framework. It's difficult to confiscate. So yeah, it has its place in this wealth redistribution, which is inevitably coming. Like, we don't know when. Maybe within the year, maybe within a decade or two, but it's inevitable. Hasu brings an important point that Blockstream Liquid has now surpassed wrapped BTC on Ethereum. So Blockstream Liquid has 1,600 BTC, while wrapped BTC on Ethereum has only 1,050. And Liquid is an excellent chain, and it's a pity that only Bitfinex at the moment is using it. There will be another post where I will mention this, so we'll come back to this in a moment. MakerDAO is a glorified pawn shop. You get a loan if you post crypto collateral, and you have to post a lot of that collateral. Given that technology is experimental, it's literally playing with fire. I never thought that very prolonged departure from the dollar peg will be due to, wait for it, decentralized vote of greedy guys. So essentially, DAI is trading 2 to 3% above $1. It should be trading at $1. That's the whole point of this stable coin, and to bring the value of this stable coin down, you should reduce the interest rate so that people are selling it. But they keep the interest rate rather high by their vote, and the vote is by people who have stake in the Maker tokens, and they are incentivized to charge all these fees, but they should be incentivized also to keep this stable coin at $1. Some people claim that this was a good move, so it's a subject to a debate, but more or less, like, if you keep high interest on an asset, it will likely be slightly pushed in value, pushed up. A picture worth 6 trillion words, the balance sheet of Fed, it's exploded, and it will not go without consequences. BCH and BSV combined hash rate in the last 24 hours was less than 2% of BTC hash rate. It just shows how crappy these two shitcoins are, and how dangerous it is to store wealth on these chains. It's really cheap to attack them. We can actually check the cost of attacking Bitcoin Satoshi Vision and Bitcoin ABC are about 8 grand per hour to attack. So that's really cheap. That's really cheap. It shouldn't be this cheap. Yeah, you can easily afford attacking these chains for one day and then that will spend some deposits to an exchange. Adam Back says that Craig Wright, who has sued him, I think Adam Back called him a liar or something, and now Craig is flexing muscles, suing everyone, but then he realized that he's losing this one after he has figured out that Adam Back has some real good counsel, and he reimbursed him all the costs, 100% of his costs, which is unusual. In general, people reimburse around 70% of fees. Innovation trial and error led to the rise of Bitcoin derivatives. Fast forward several years and everyone and the dog are trying to copy Bitmex. It's actually funny how long it took all other exchanges to understand why BTC USD swap is so great and copy it. And it truly is great. It resembles a normal spot market, and people who are not too sophisticated can just assume that it works as a spot market and stop there, while people who dive deeper into this contract can find some more interesting stuff and can find some arbitrage opportunities. The initial approach was futures, and people don't understand futures. Some people didn't understand why their long position has ceased to exist, didn't understand premiums too much. So futures are for people who at least have some understanding, and swap, the perpetual swap, makes a contract accessible to pretty much everyone with very little understanding, and that's great. BCH has always been a joke. They created a difficulty adjustment algorithm, and with this in mind, they are now with this in mind, which is exploiting it, and now they are exploiting the algorithm. So before the halvening on BCH, where is it? There were some other miners and they were not exploiting all this so aggressively, but now it seems like there are only a few miners left and they are very aggressively exploiting BCH. They are mining very hard when the difficulty is low, and then they stop mining. Then the difficulty goes down again, and then they're mining. So as a result, they mine way more coins than they would if they were mining at a stable rate. So it's a little bit unfair on the coin holders, but hey, yeah, they've created this algorithm, and now they are just harvesting profits, and holders cannot really do anything about it. But yeah, that was quite a clever move to create such a difficulty adjustment mechanism. Inflation may be way higher than people think. Here, this guy claims it may be closer to 10% than 2%. If you look at the alternative CPI measures, they are closer to 10%, and the official one is 2%. So truth is probably somewhere in between, but in my view, it's way higher than 2% and way closer to 10%. A funny illustration mocking US dollar, infinity and beyond. They have printed so much US dollars. Bitmex has just increased leverage on XBT and ETH contracts, just a tiny bit. Just the maintenance margin requirements have dropped a little bit. This is just a good joke by Actual Advice BTC. Horrible dream where everything was the same quarantine life, but without internet and masturbation stopped working. Yeah, this guy is interesting to follow. He is a big baller. He trades really large volumes. I recommend you follow him. This is the Greenspan, Bernanke, Yellen Powell legacy. They've increased the financial assets like crazy, and now people will have to deal with it. Like, there's only one path to continue until it collapses. Like, no population will agree to all these debts being repaid by them, so it needs to come as an inevitable sudden event. Amazon making new all-time highs because it's so well positioned in the crisis. You have to agree that ETH is quite flexible. It was supposed to be the world computer initially, and that was a false claim. Like, it would never be the world computer. Then it became a DApp platform and the platform for scam ICOs. And now it's a globally accessible 24/7 digital euro-dollar infrastructure, and this is a big thing. So the stable coins on Ethereum are easily accessible, easily transferable, and really secure. So it is really flexible. Contracts for difference brokers are getting hit with some trading from sharp retail. So some people are realizing that if they open a long and a short and keep their position over the weekend, they take advantage of the gap pricing. An interesting thing that doesn't happen in crypto. So you go long, you go short, and the position is kept alive over the weekend. It's quite interesting. Brian Armstrong from Coinbase Pro, or Coinbase actually, he says that. So you probably all know about the 1.2K stimulus which U.S. citizens got, and they got it at the beginning of April. And here is the chart of deposits and purchases, which are exact same size as the stimulus, which is $1,200. It has spiked like crazy. So people are in fact buying Bitcoin and other crypto with the stimulus checks, which is hilarious. So this is the chart of SQ. So SQ is whether people are buying calls or puts and what's becoming more expensive. So before the dump, everyone was buying calls. After the dump, everyone is buying puts. But what's interesting that here, just before the dump, some people were buying puts, and a lot of puts. And I wonder whether they knew about the dump. Here, rookie mistake by Eric Voorhees. He equates reporting volume to liquidity, claiming that ETH is more liquid than BTC. Obviously, this is not the case. A lot of these exchanges are claiming fake volume, and the reported volume is certainly not liquidity. Of the 18.08 million Bitcoin which have been minted, only 11.6 or 64% of the supply. 64% of the supply has not moved since 2018, and a lot has happened since 2018. So Bitcoin hodlers really do have balls of steel. It took 500 years of global reserve currency data. The guy took 500 years of global reserve currency data and overlaid Ray Dalio's relative standing of great empires chart. So it just shows how the empires have raised and fallen. So that's Spain, Netherlands, France, UK, and USA is now heading towards the abyss, most likely. And it will be troubling time all over the world, probably. Saving in Bitcoin creates a virtuous cycle that enriches its holders and simultaneously reduces demand for inferior stores of value like fiat currency and gold. In this sense, holding Bitcoin is contributing to a global charity mandated with the separation of money and state. And separation of money and state is always, it should be good, at least in my view. The helicopter money in China is coming in the form of direct coupons airdropped from payment operators such as Alipay. Each municipality has its own budget, so the amount varies per region. There are also different airdrop logic programmed based on your location, purchase history, and items. And it's good to have good credit rating in China and not to oppose the state, because in that case you probably get less helicopter money. This is a funny post. Well, I think the sound is here a little bit too loud, but here Kyle says that DeForce will onboard millions of users onto DeFi in the coming years with strong partnerships, integrations, and whatnot. I believe that they have invested in DeForce, and suddenly you have another copy of DAO hack where someone just completely drains the value of coins locked in DeForce. So people did the re-entrancy attack and just drained all the funds from DeForce. There will be some more posts about this higher up. This is a good open community initiative. People are checking how many transactions are being executed in the middle of the order book where nothing should be executed, like at the top and at the bottom. Well, at the leading edge at the top and at the bottom, there are two orders, and either someone buys the highest ask or sells the best bid. People should not execute in the middle of that, but they are, and this is an indicator of a fake volume, one of the indicators. So there are many other ways of faking volume, but if you look at this, Binance is faking approximately 30% of the volume. Kraken is not, Bitfinex is not, Coinbase is executing around 20 to 40% of volume between the spread, which is fishy. I don't think that Coinbase is faking volume just because of my trust. So it needs a little bit further investigation. But Binance, yeah, I think they have too high of a volume, and Bilex totally fake. Yeah, I am not surprised about that. Another list of fake exchanges. So it's important that you don't believe charts like this, which say that MXC, Bitforex, Bitmex, ZB, Buybox are true big exchanges. They are not. While I agree with the statement that CeFi, which is centralized finance, while I agree with Jameson Loop's statement that DeFi essentially runs as a centralized finance, so I agree with this statement, but the centralized, kind of partially centralized finance has some benefits. So it's not as apocalypse proof as BTC is, but on the contrary, on the other end of the spectrum, you have a regular institution, which is really bad, 100% centralized, maybe around one person. The DeFi, which is the system built on Ethereum, or you can call that centralized finance, CeFi, it is something in between. So there are oracles and there are teams which have influence, but this influence is limited and they cannot just do anything to the contract, to the system. So there is some volume, there is some value in the DeFi space, even though the oracles are not perfect and the systems are not perfect. Like removing some power from the people who make decisions is still good, and you don't have to be as perfect as BTC is to have value. SBF Alameda says, another fun hotbit fact: a year ago we sent 0.04 BTC there to test out a supposed 10% arbitrage, assuming it was fake, but you never know. So they have requested the withdrawal of that, and it's pending since 2019. Another fun fact: they have placed a bid for USDK versus USDT, and the volume faking bot seems very confused by the presence of another trader on the exchange, and since then the volume has dropped from $200 per minute to zero. So just the presence of SBF and Alameda research arbitrage firm caused the volume to drop to zero, the fake volume. So it looks like the attacker, which has drained D-Force, is returning the assets partially. Well, it is believed that he has leaked his identity through the VPN. So yeah, that kind of brings the funny name of almost decentralized finance. Willy Woo says that the M3 money supply is $18 trillion, USD held by foreign reserves $6.7 trillion. This gives you an idea of how much dilution of value the US is exporting to other economies as the USD printing press goes into full swing. So around 37% of the monetary inflation is exported, and it's great for US economy. they are doing slow kind of hyperinflation, but they are not only taking US citizens for the journey, they are taking the entire world for the journey. It puts them into a very good position, having the world reserve currency. This is a great intuitive explainer of reentrancy attack. So this is the attack which has drained which was it? What protocol was that? Anyway, that attack which has drained can be explained like this. I would like to withdraw my entire balance in cash. Sure, here you go. The guy withdrawing mysteriously vanishes. What the hell? Where did he go? Wonders Alice. And then, anyway, I'll just make it shorter. So a guy appears. He says he wants to withdraw the money, and then you say, okay, I'll withdraw your money, and then he disappears. And the person who has withdrawn wants to update the state of his account, but she can't because another teller, another window, another bank branch is changing the balance, and that's because the same guy is at the same window somewhere else in another bank branch and in another bank branch, so he's at the very same time making the withdrawal of all his funds, and he's just withdrawing his funds infinite amount of times at the same time, and nobody can update his balance because he's doing this at the same time. All the fun with the contracts for difference on WTI, or someone can make fun of it as the ticker should change to WTF, crude oil. So the crude oil has dumped to minus $38 per barrel. So people were paying others to take a barrel of oil from their hands at $38. Amazing. So people kind of lose sense of what is reality, what is not. Imagine investing in oil as an inflation hedge and then having your house auctioned because the price went negative, and this can happen. Like, this is not Bitmex. CME is a big marketplace. You essentially post all your assets as as your position loses value, and if you don't have a stop loss which executes where you want it to execute, you are fully responsible for that position with all your wealth. But the oil price was not negative, it was just one contract. So one financial product on oil that was about to end was going negative for technical reason. The next contract was about $22, now it's around 10. But this just shows people the absurdity of financial markets and financial futures. This is live shot of traders reacting to the historic events occurring today in oil markets. And it's funny because it's these machines which have done it, more or less. A human wouldn't really sell an oil barrel contract for minus $37. It's the financialization of the assets, and we'll see more of this in my view. The Fed, Treasury, US government monetary and fiscal response to coronavirus is the most aggressive response of its kind in the history of civilization by a country mile. And it was done at a time when the USD was the world reserve currency with a strength never seen before. Totally unprecedented, and I totally agree. The skew on options on Deribit remains well supported, so people are still buying puts and the price is going up. When they start buying calls, then probably the price will go the other way. Apparently the guy who has hacked D4s using the same attack which was used on DAO, he's returning all the funds, probably. They know his identity. Bitcoin halving coming soon. Senate has passed stimulus bill equivalent to 70 million Bitcoin. Nice. An epic post. This is about the culture of busting trades, and it's worth looking. If you go to Kevin Muir, that's his account. He has a nice post where he explains how CME exchange has been busting his trades because they were unfair, or something was not disclosed, or something was not right. And now they allow oil to go to minus 37. So it doesn't make any sense why they were busting his trades over such a minor issues, and now they allow oil to go to minus $38. It's remarkable how fast FTX.com has added the oil futures market. However, they have done a funny thing. They have increased the value of the contract by $100. So I'll get to that in a moment. But if you buy a $5 barrel of oil, you buy a contract which is worth 105, and SBF Alameda says that this is just to prevent prices going negative and messing with the bots and everything else. But the truth is that now when you're buying a $5 worth of oil barrel, you're paying a fee on a $105 contract, so it increases your fees by 21 times. So you're paying 21 times what you would have paid otherwise. Very clever move. It's quite expensive to buy and sell these contracts. This oil issue has caused an interesting issue on EMX exchange. So EMX is an exchange where you can trade oil futures, and essentially they were not expecting price to go negative, so they have stopped at around zero, and there are some liquidity issues. It has caused a lot of issues, but it's a small a small venue, so probably not too many issues. Human race failing pretty hard at achieving consensus on reality lately, and this will just continue and get worse. I think this is hilarious. Stay at home so we can make COVID disappear, like millions of dollars from Ethereum DeFi. Very well done. Quant Fiction says, because I'm feeling cheeky and pretty confident that this good luck streak won't last, figured I'll share performance since I funded my options account. Might as well flex at the top, huh? And he has made 800% gains since March. Well done. So he's using quantitative stats to trade, and the machine is trading for him pretty much. And he has done pretty well, but this could be random. I don't think so. I think he makes consistently decent gains, but it's hard to tell how is someone doing. This is an article which is about halving in the time of coronavirus. Worth a read. You can find it on Bitmex Research. The Saudis and Russians have declared war against US shale energy companies. It seems they weren't happy with American energy independence. Storage is full, largest glut in the history. Saudis are sending us 50 million barrel bomb of oil. How negative will June crude go? These are how many? 24 super tankers carrying 50 million barrels. So the price will probably stay suppressed, and that will probably kill the shale energy market in US, and that will be long-term good outcome for Saudis and Russians. I appreciate that Kyle Bass has a good point, and that's about the Hong Kong dollar getting deleveraged. I think that within a decade, that the Hong Kong dollar will decouple from the peg to the US dollar and go down in a massive chain of deleverages in Hong Kong, which is over leveraged. I think that within a decade or two, Kyle Bass will be proven right, but this is just hilarious. Who would have thought that Hong Kong dollar will go up because the shitcoin it is pegged to went brrr as AF? Luck in trading is probably very underestimated. So essentially, Hong Kong Monetary Authority is buying USD Hong Kong dollar. So it is now defending the other side of the peg for the first time since 2015, and that's because the Fed expanded the balance sheet. The LIBOR is likely to ease, and that creates a carry. So it is worth it is more profitable to have Hong Kong dollars because they have more interest. So people are selling US dollars, buying Hong Kong dollars, and lending the Hong Kong dollars because it gives more interest, and that results in a stronger Hong Kong dollar, and it can just hit the peg. And I'm pretty sure it will never break the peg to the upside, but it just projects that it is less likely that Hong Kong dollar will break the peg anytime soon. And I think it's really funny. Getting this balance is key to being satisfied with your trading. And actual advice says, any whale that is worse trader than me is a retard. Any whale better than him has no life. Yeah, it's good to find the balance. Bitcoin is going to 20k again, and there's nothing you or your stupid friends can do about it. Very nice quote. I agree. Arthur Hayes says that they're bringing another new product on the 5th of May, so that's in just a few days. They will launch ETHUSD Quanto Futures, and this will be 50x, and I will probably be long this future. A lot of people will disagree, so this product will be initially mispriced. It will be very hard to determine a fair value, and many market makers will disagree with each other about how it should be valued. This is a lucky expiry. Like a clockwork. These expired in money, and all these expired expired out of money. Greater Tokyo could see power grid disruptions soon if it cannot deploy fresh LNG from Middle East soon. So it just proves how important the nuclear energy is. Don't focus too much on making new highs. They are great for attracting media attention and creating FOMO, but the real achievement is making consistently higher lows. And this is what Bitcoin has been doing. Life comes at you fast. So Hedgic Options has created ETH call put options, and they say they had security audit from Trail of Bits. It was 1 day later, less than 1 day later, alert, a typo has been found in the code. Because of that, liquidity in expired options contracts can't be unlocked for new options. Please exercise all your active options contracts now. Everyone will be 100% refunded with the amount of premium that they have paid for the options. It's just hilarious. They've made a typo, and everyone who allows their contracts to live and exist will lose all their money. Not great. 6 weeks later, after the dump, Bitcoin implied volatility is nearly back to its pre-sell-off level. That's good. It's an opportunity to buy options. OPEC oil producers have chosen a perfect timing for price war. Their goal seems to be bankrupting competition, having higher cost of production. When US producers go bankrupt, OPEC can push the price to even higher levels than beforehand and enjoy selling larger volume of oil. Printing money keeps things stable but becomes increasingly less effective. The debt bubble cannot be repaid and will burst one day with a horrible PR and angry mobs, which nobody wants. The coronavirus comes, you set the printer to full speed, let it pop, and blame it on the coronavirus. That can be how the global debt scenario unfolds. If you let it deflate on its own without a good explanation, that will make people angry. But if you blame it on the COVID and the lockdown, hey, it actually makes some sense. And it allows you to kind of survive from the political standpoint. FTX.com is great, but it's hard not to notice how that Sam from Alameda knows how to extract dollars from or money from the users. The bull bear tokens generate lots of taker fees on FTX, and all the token holders are paying for that. Also, they're paying the maintenance fee and whatnot, and creation fee as well, which is pretty high. Oil contracts have value plus $100, so one oil barrel, $5 worth of oil generates $105 worth of fees, which is rather fair. Like, their fees are really low, but it's it's not great. Funding for 30K is 0.1% per day. So if your account is in debt by more than 30K, you pay 0.1% on all that, rather than getting part of your assets liquidated. So it's all well disclosed and kind of fair. So you don't have to buy these products and you don't have to pay him all this money. But a lot of people will not go into the details, and they will be slammed with all these fees on bull bear tokens and fees on the oil contract. It's not great. I would, there are some cheap things on FTX, and bull bear tokens and oil, they are not the cheapest things to trade there. Insurance fund injection. So Deribit is injecting some more money into the insurance fund, so it's now at all-time high. And recently, in an email from Deribit, it mentioned that there has never been a clawback, which is hilarious, because if they didn't inject it, there would have been a clawback. So yeah, they have done it for the PR, and well done. Adam Back says Bitcoin versus layer 2 liquid versus Lightning is not a one-dimensional comparison. Security, Bitcoin is better than liquid, better than Lightning, better than exchange. Trust, uncensorable and unseizable, Bitcoin is best, the mainnet, then it's Lightning, then it's liquid, then exchange. Confidentiality, liquid is the best, then Lightning, then Bitcoin. And speed, Lightning is the best, then liquid, then Bitcoin. And liquid is a really, really good product. And that is us. Thank you very much for watching. Please like, comment, and subscribe. Please look at the links below. They will save you some money.